Welcome back to our channel, where we help you make informed decisions and build wealth through smart investments. Today, we're diving into one of the most lucrative investment opportunities: real estate. Whether you're a seasoned investor or just getting started, this guide will provide you with the knowledge and tips you need to succeed. Let's jump right in. Before we delve into the specifics, let's establish a solid foundation of real estate investing. Real estate can offer numerous benefits, including passive income, tax advantages, and potential appreciation over time. However, like any investment, it's important to understand the risks and do your due diligence. There are several ways to invest in real estate, and each comes with its own set of considerations. Here are some common types of real estate investments. 1. Residential properties. These include single-family homes, apartments, and condominiums. 2. Commercial properties. This category encompasses office buildings, retail spaces, and warehouses. 3. Industrial properties. Investing in warehouses, manufacturing facilities, and distribution centers falls under this type. 4. Real estate investment trusts, REITs. REITs allow you to invest in real estate through shares of publicly traded companies. 5. Real estate crowdfunding. This option involves pooling funds with other investors to purchase properties. Once you've decided on the type of investment that suits your goals and risk tolerance, it's crucial to research the market thoroughly. 1. Location. Look for areas with strong economic growth, job opportunities, and a desirable living environment. 2. Rental demand. If you're investing in rental properties, analyze the rental demand and vacancy rates in the area. 3. Property value. Consider the historical and projected property values in the market you're interested in. Real estate investments often require substantial capital, but there are various financing options available. 1. Traditional mortgages. Secure a loan from a bank or mortgage lender. 2. Private financing. Explore options such as private investors or hard money lenders. 3. Partnerships. Consider forming partnerships to pool resources and share risks. Managing and maintaining properties efficiently is vital for long-term success. Here are some key considerations. 1. Property management. Decide whether you'll handle property management tasks yourself or hire a professional property management company. 2. Regular maintenance. Schedule routine inspections and address repairs promptly to maintain property value. 3. Tenant selection. Screen tenants thoroughly and establish clear lease agreements to minimize potential issues. Real estate investments offer several tax advantages. Consult with a tax professional to optimize your tax strategy, but here are a few common benefits. 1. Mortgage interest deduction. Deduct the interest paid on your mortgage loan from your taxable income. 2. Depreciation. Offset taxable income by deducting depreciation expenses on your property. 3. 1031 exchange. Use a 1031 exchange to defer capital gains taxes when selling and reinvesting in like-kind properties. Investing in real estate can be a game-changer for building long-term wealth, but it's crucial to educate yourself and approach it with a strategic mindset. Remember, every investment comes with risks, so conduct thorough research, seek professional advice when needed, and diversify your portfolio. That wraps up our ultimate guide to investing in real estate. We hope you found this video helpful. If you did, please give it a thumbs up and consider subscribing to our channel for more investment tips and strategies. As always, feel free to leave your questions and comments below. Thanks for watching, and we'll see you in the next video.